Okay, folks, welcome to Best Stock Charts for the coming week. A lot to go over, and I'm going to spend some time doing an overview on Best Stock Charts. I am going to go into great detail on the week ahead commentary with members about how we plan on trading the markets in the coming week and weeks. But first, we want to go over the charts that I like coming into this new trading week, and I'm going to express some concerns. My concern is that this market is poised for a crash. And I rarely use that term crash because I believe that the words bubble and crash are used far too often to the point of being meaningless. So let's analyze a bit why I believe that this market is set up for a crash. Let's take a look at the VIX. The VIX last week hit single digits intraday, and that's the first time since before the financial crisis, immediately before the financial crisis, that we've seen the VIX hit single digits. That is not good. At current, we closed out last week at 10.97. Take note of your Stokes forming a double bottom setup. A huge double bottom setup forming on price. The last time we bounced off of this level was back here in June of 2014. Now, you may be saying, Bob, let's face it, pal, the VIX closed in a trading range where it's been trading for a few years now. What's your problem, dude? And that's a fair statement. Let's go to the other charts that I'm watching. You may be thinking that going into this new trading week that I'm bearish on the market. Nothing could be further from the truth. Even though I have a short position, which I'll get to in a moment, on the Russell 2000, guess what? I'm not going to hide behind my positions and speak my book. I'm going to tell you the way it is. And I think that this coming week, we are breaking out. Take a look at the weekly chart of the Russell 2000. We are in a bull flag formation, a strong consolidation. I think that we're poised after last week's bullish key reversal for a move higher out of that trading range. Volume last week, strong. Ultimate oscillator hooking up. Bullish. How are we going to play it? The TNA, which is a leveraged ETF, putting you long of the Russell 2000. You could see it is mirroring the bull flag setup on the Russell 2000. And we had a bullish key reversal on the TNA last week. A beautiful base. It is consolidating above. Last time we saw this as resistance was back here in June of 2015. Now it is acting as support. You can see also that this is a continuation breakout. What does that mean? Well, we had an inverted head and shoulders setup. Left shoulder, head, right shoulder. 82.57 was the neckline. We cleared it. We are digesting gains, or I should say we have been digesting gains, and now it appears that we are poised to break out higher. So I am bullish on the TNA. Now to the TZA, I am still bullish. Now this is double speak, right? I am still bullish on the TZA longer term, not short term. I am bearish on the TZA right now, and I hold the position. Not a huge position, but I hold a position. So this is not me speaking my book, exactly the opposite. Last week, we saw RSI begin to roll over and price flashed a bearish key reversal off of resistance at $20.51. Volume to the downside, very, very high, rolling over an ultimate oscillator. Now, why am I bullish longer term on the TZA? I'm looking at the slow Stokes. I think that we're putting in a beautiful double bottom setup, and we're setting up for a big rally in the coming weeks. Short term, bearish. Longer term, bullish. And if you take a look back at double bottom setups from a bygone era, you can see that they lead to big rallies in the TZA. Go back here to 2013, a double bottom setup, and you saw the TZA rally from 146.24 up to 171.80. Obviously, there have been some split adjustments here. Then again, here in late 2014 into 2015, we formed this double bottom setup, which then began a series of higher lows for the stochastics, and that led to this rally here from 35.24 up to 55.80, a fairly vicious bull run. So the TZA Very short-term bearish on, longer-term bullish. Now, these next charts I'm going to go over, all going to be weekly charts. On the week ahead commentary, I'm going to go over the daily and intraday charts with members, along with where I believe the markets are going on Market Pulse Check. So AAWW, I am bullish on. Last week, though, was a bearish week, to be perfectly honest with you. An inside week, but the daily chart is setting up nicely for a nice bull run higher. So I'm not going to be jumping in on Monday morning looking to buy a position in AAWW. Volume to the downside last week was very light. A series of lower highs on Stokes. So we may see another week or so of consolidation. We may even pull back to retest the 50 level, which will probably coincide with the lower band of the rising uptrend channel. Next chart up, Honeywell. We broke out last week above resistance. Where do I think we're going now? I think that this prior lower band of support, remember, we broke down on a weekly basis, but we recovered. This prior lower band of support is now going to act as a rising upper band of resistance. We flashed a bullish key reversal last week. Volume was a bit light, but Honeywell looks good as a long trade. Members will be going over a daily chart and possibly an intraday chart to define when we want to get long of Honeywell. SALE, weekly chart, a very nice pennant formation forming. What we're looking for is a retest of the lower band of support where we'll look to open up a position and then add more on a breakout above resistance. Members will be going over the daily chart in a moment on the week ahead commentary. Take note of Stokes on a weekly basis, putting in a higher low. Now these Stokes are now beginning to hook up and appear poised to break out. SALE is looking very attractive as a long trade. Next chart up, Clean Energy Fuels, CLNE. I think that oil is going to rally. Members will talk more about energy and oil on the week ahead commentary, but for the purposes of having a conversation with regard to CLNE, I think the shares are forming a very, very nice bottom. I believe that we are putting in a higher low. You see your Stokes hooking up now. Volume to the downside was below average last week, which is good. And we did rally off the lows of the week. Now, there's more to talk about with CLNE on the daily chart. The weekly chart is not telling the entire story. You may be asking, why are you going over these weekly charts? It's just to give you folks that are not members a flavor for what we do. We do multi-period charts, meaning we take a look at the macro view, not just the micro view, daily charts, 10-minute charts. That's ridiculous. You need to take a look at where the stock has been to identify where it might be going. And if you could see that we are at historical support on a weekly basis, well, that means that your daily chart, which may be setting up for a nice bull flag formation or a continuation breakout trade, well, then that likelihood of a breakout is all the more probable. And all we deal with are probabilities. So it's good to have your multi-period charts, weekly charts, daily charts, intraday charts, all in alignment. Next chart up, Poly1 Corp, weekly chart. A beautiful inverted head and shoulder setup that had formed, left shoulder, head, right shoulder. We appear poised to now attack the neckline, this 45-degree neckline. Last week, after we had broken out the prior week above resistance, we had pulled back last week to retest the breakout point, and then we flashed a bullish key reversal. Beautiful. Members will talk more about this chart on the week ahead commentary. And that's it for this week, folks. If you're not currently a member, please sign up for a 14-day free trial offer, or at least enter your email address. We hate spam too, and we'll get these videos out to you along with a couple of free trade tutorials. And of course, don't forget to join our Facebook discussion group. Great people in there sharing great ideas. Everybody have a profitable trading week and enjoy the Super Bowl. Be well.